My mission is simple, to help you protect your family and keep more of your money. I'm here to help level the playing field for families and those who seek the truth. There's always a new way to make money, but at the end of the day, it's your family's security and your legacy that matter. And I promise to help you protect what's really important to you. Legacy Money starts now. Hi, I'm Barry Page, founder of Legacy Insurance Agency and creator of Legacy Money. I'm not here to entertain you. I'm here to inform and educate. This video is not about buying and selling stocks or investing in the latest fads. It's about financial security and creating generational wealth. And if you'll stay with me, by the end of this video, you'll understand exactly how you can own the alternative to traditional investing so you can protect your family and recover the losses. Okay, let's jump right into it, and I'm going to discuss the alternative to traditional investing. Here's what I believe. I believe there's more to be had by avoiding the losses than by picking the winners. I believe that people should be in control of their own finances so they can have true independence. Alternatives to investing. So, alternative investment strategies aren't just for the super wealthy and elite. Anyone can bring significant benefits to their current financial portfolio by diversifying the risk exposure away from traditional financial products. Many financial advisors are promoting alternative investments to institutional investors or accredited high net worth individuals, but you can utilize these simple strategies today. These other products and plans are often very complicated and have complex regulations on the investments themselves. Financial education. One of my favorite authors, Robert Kiyosaki, author of Rich Dad, Poor Dad, said, "To control a car, the key is driver's education. With assets, the key is financial education." What Robert is talking about is self-education. What you didn't learn in school with your formal education. These are things you can learn on your own to increase your cash flow today. On the subject of control, have you ever thought about who's really in control of your money? I mean, just last month, February of 2020, the stock markets were at all-time highs. Whoever thought the coronavirus would disrupt our entire economy? The stock market is not something you can predict or control. In 2006, real estate was working for everyone that was willing to invest. Rents were fairly priced and producing generous income for investors. Whoever thought there would be a mortgage meltdown, or that property taxes could double, or property insurance could triple? These things are out of our control. Markets, taxes, the economy, and the weather. There's always some new way to invest. First there was mutual funds, then index funds, exchange-traded funds, and Bitcoin, cryptocurrency. And of course, there's the good old-fashioned gold, silver, and real estate. The problem with most of these assets and new ways to make money or invest your money is most people never really think of an exit strategy. How do you spend the money? What do you do with it? Will it be there when you need it? Let's talk about antiques. Antiques hold value. What I'm going to share with you is not new. It's been around for centuries, and it's not investing. Wealthy families use it, corporations use it, and the banks use it. These plans and strategies are simple and have less risk. What you might hear is, oh, there's a new this or a new that. We've manufactured a new antique. Think about that. You can't manufacture new antiques. So here's some real important questions to ask yourself. What will the impact of a market crash or any type of economic crash be on your financial plan? Whether it be your 401k, your IRA, what will the impact be? It doesn't matter if you own stocks, bonds, mutual funds. Who takes the risk? Who actually controls the money? Who has access to the money? And what will the taxes be on the money when you go to take it, when you retire, when you sell the asset? Let's take a look at some headlines. Stocks plunge 5%, ending in bear market. They're now saying we're in a bear market. Real estate stocks plunge on coronavirus epidemic as coronavirus epidemic spreads. Bitcoin just suffered its worst drop. Plunge in rates scrambles Fed stimulus playbook. And here's today's March 11th, 2020 gold price, down $20 just today. Now, I'm not trying to be the bearer of bad news. These aren't my headlines. I'm just pointing out to you what's going on. We can't be asleep at the wheel. Sure, these markets, these assets will come back at some point. It's just a matter of when and if you'll be ready. Sure, it could be a good time to buy. Do you have liquidity? Do you have access to capital? Someone will capitalize on these down markets, these bear markets. But these headlines, these warnings, they've been around for a while. Some great economists, Austrian economists that look at things a little different, they've been warning us for years. Here's what Ron Paul said. The seeds have been sown and the collapse is on the way. Peter Schiff said, I think we're heading for a worse economic crisis. And Tom Wood said, when the crisis comes, it will come dramatically. Well, folks, it's here, and it is dramatic, without any doubt. We'll see how big the collapse is. So what are the risks? Well, obviously there's market risk. You could lose your money. If you have money invested in the stock markets, the market collapses or crashes, then you lose that money. You can't get that money back. It's gone forever. These are the three major indices just over the past month. You can look at the Dow, you can look at the NASDAQ, you can look at the S&P, or any other market. They're in decline today. Here's another risk that we don't often think about. It's inflation. As the monetary supply increases, it's inflated, then our dollars are worth less. When the Federal Reserve says they're going to increase or stimulate the economy, what does that do to the value of our spending dollars? And of course, there's the risk of taxes. Taxes will be the largest transfer of our wealth. Many people, unfortunately, have most of their money tied up in government plans where they'll have to pay taxes when they get the money. What will the politicians do when the bills are due on all of this spending that they have planned? When I talk to people, most people think that taxes are high today. But if you just look at this chart, you'll see taxes have been as high as 94%. And in fact, the average is well over 57% for the highest brackets. That means if you have $1 million in your IRA and you're in a 25% federal bracket and a 5% state bracket, well, that means that your money that you can keep is only $700,000 after the 30% tax. What if taxes just increase to the average of 57%? That means your $1 million now only nets you about 43%. Or after state tax, even less. You see, this is what big government does. They spend your tax dollars. What are you going to do if taxes increase? How will your money spend? On the subject of history, let's look at a few historical charts from macro trends. Here's the Dow Jones 20-year. How about the NASDAQ? And here's the S&P 500 20-year historical chart. Of course, some people made money, but many others lost. How do you realize a gain? How do you spend the money? And of course, gold. Here's the 10-year historical on gold. Of course, gold has gone up in recent years in value. Many people think gold is a safe haven during these troubling times. But the bottom line is really timing. How do you time the markets? How do you time gold? And then how do you spend the gold? You can't walk in to the market today, anyway, and spend gold. You have to sell it to someone willing to buy. And even if the price of gold goes up to, who knows, $5,000, who's going to buy the gold then at $5,000 an ounce? How do you sell the gold? How do you realize the gain? Silver's the same way. Now, silver's a little more economical. Of course, you can buy coins and maybe barter with those, but you still have to look at who wants to buy, how do you spend the asset. And there's Bitcoin or cryptocurrency. Of course, these are relatively new assets, so we don't have as far back to look when you look at history. But what you need to notice is the volatility, ups and downs, sharp swings. So with all of these assets, it really boils down to buying low, selling high. It's all about timing. How do you time when you're ready to cash in the asset? How do you spend the money? So what I want to talk to you about is the velocity of money. Just ask yourself, what is your greatest asset? Very rarely do people say that they are the asset, that they produce the income. But you are. You are the asset, your ability to create income. And we need to think of this the same way that banks do. They turn their money. They put a velocity on it by taking other people's money and loaning it out and having profits. What if you had an asset that gave you liquid cash anytime you wanted it for any reason so you could spend it to buy other assets that produce income? So, what if you were the investment? If your alternative was investing in yourself? Owning permanent life insurance should not be looked at as investing. What it is an effective way to protect and grow your wealth. It provides you with protection. It provides you with savings. You have liquidity, growth on your money, cash flow, and tremendous tax advantages. And you can use it while you're alive. You don't have to die to use the asset. Permanent dividend paying life insurance from a mutual insurance company allows you to get multiple uses of your dollars. Your money works harder. You won't get the returns that you might get in the stock market, but you won't take the risk either. You can't lose the money once it's in the plan as long as the premiums are paid according to the schedule that you choose at the beginning. Permanent life insurance is one of the safest assets that you can own. There's a reason that banks and corporations own so much of it. Permanent life insurance offers guarantees for future growth and for your legacy. The death benefit is guaranteed from day one. The premium is guaranteed to remain level. The cash value is guaranteed to go up every year. Dividends are not guaranteed. However, the companies we work with, mutual companies, have a consistent record of paying dividends for over 100 years. And once the dividend is declared, it is guaranteed, so it can't go away. Dividends can be used to grow the policy, reduce the premiums, or be paid in cash. Uninterrupted compounding. We have a certain time period for our money to mature. Permanent life insurance offers uninterrupted compounding, maturity of money. Your money has time to grow uninterrupted. For example, say you took out a loan to pay for your children's college or to purchase a car or for cash flow for your business. The money continues to grow even though there's a loan. During the Great Depression, many banks closed their doors and didn't allow withdrawal of funds. The life insurance industry played an important role by providing liquidity to their policyholders when such monies were very limited. There's another alternative to investing that's called an annuity. Annuities have been around for centuries as well. They're actually a life insurance product, and they're used in many pensions today and have been for many, many years. And we're just talking about good old-fashioned annuities. They've got a lot of bad press in recent years. There's deferred or income annuities. Of course, there's many variables. There's variable annuities, there's indexed annuities, but I'm talking about plain, simple, and safe fixed annuities. They can work in conjunction with life insurance. They provide guaranteed income, tax advantages, and they're safe. So depending on your age and income needs and your risk tolerance, you can choose what's best for you. At the end of our working life, it all boils down to distribution, the income that you can receive from the assets that you may have built over your working years. Combining annuities and life insurance reduces your risk. They work in both directions. Annuities take care of you if you live too long. Life insurance takes care of you and your family should you die too soon. So you do have alternatives to traditional investing. And if you want to learn more, then just reach out to us. If you have any questions or comments, just leave them in the comments section below. And please subscribe to our YouTube channel, Legacy Money. Watch for more of our videos. Share them with your friends and family. They need to know this stuff too. Thank you for joining me. I hope you enjoyed this video, and if you did, just give me a thumbs up. I'd appreciate it if you subscribe to our channel. Go ahead and hit the little bell so you'll be notified of upcoming videos. We put out new content weekly. So I'll see you in the next video.